Good afternoon, traders and investors. Will back here with another one. Well, guys, inflation is officially dead. We've been calling for this on the channel for months and months now, and it's finally starting to downtrend in a significant fashion. The downtrend was almost always there, but today we really put the nail in the inflation coffin here today. Markets absolutely loving the report this morning on CPI, guys. It was a great report. So we're going to go over the CPI report, of course. We do have two companies that I want to cover on earnings, Home Depot and Canadian Solar here, one of my solar plays. We're also going to cover our major indexes, all major indexes in the green, the Russell having one of its best days in years, and we're going to be covering major tech stocks as well, guys. So a lot to cover in the video. Hope you guys had a beautiful day. Everybody should have had a beautiful day unless you were short, unfortunately, here. So without further ado, let's get right into the video here, guys. So CPI, guys, you'll see SPY up 1.94%, QQQ up 2.15%, another 2% day for the indexes. There's been more 2% days here in November than pretty much all year at this point, guys. So it's been a very good month in terms of seasonality. So what exactly happened on the report this morning? I will show you. It came in lower than expected here. Inflation was flat in October from the prior month. Core CPI hits 2-year lows actually since November 2021. So the consumer price index was flat in October from the previous month, but increased 3.2% from a year ago. The consensus for today was 3.3. Both were below Wall Street estimates, sparking a major rally on Wall Street. Excluding volatile food and energy prices, the core CPI rose 0.2% and 4% respectively total for core against the forecast of 0.3 month over month and 4.1% annualized here. Very, very good. The annual rate was the smallest increase since September 2021. Very, very, very good here, guys. And as I was saying in yesterday's video, a major contributor to this was the energy prices. So you guys know that oil's been declining a lot lately. Energy prices declined 2.5 for the month, offsetting a 0.3% increase in the food index here. So you will see on our beautiful little chart here, right, this line, this dark blue line here is going to be your all items, and then your 4% here is going to be your core, which is referred to as CPI less food and energy here, right? So you can see both on a very beautiful downtrend. Core has been downtrending pretty much all year here, and although we did have a little uptick here in the months of August and September, which we were predicting on the channel, we are now back down to pretty much the lows of the year, almost coming as low as the June print here. So very, very good downtrend on inflation, guys. Inflation is pretty much gone at this point. It will continue to trend down. I'll remind you that the estimates for mid next year is year-over-year inflation of 2.6%. So we are very slowly trending back towards the Fed's 2% target, which is very, very good. And traders absolutely love this today because it means that Jerome Powell potentially does not have to continue increasing interest rates. I'll remind you that people were pricing in another 0.25% interest rate hike either in the next 2 meetings, and now that might be off the table. And even better, we may even be getting some rate cuts in the middle of next year, even though Jerome Powell didn't want to comment on that, and he said higher for longer. Wall Street traders are pricing it in already. So very, very, very solid report here, guys, if I do say so myself. Everything is looking absolutely beautiful here. If you take a look here, where inflation is and isn't, you'll see that there are still a few sticky components, namely rent and restaurant meals here, housing, right? These food pretty much, and housing is still relatively high here, but a lot of things coming down into the 3% or even below 3% range here. And you can also see some deflation down here in our sectors, namely in airfare, gasoline coming down a lot here, household energy, furniture, appliances, electronics, and medical care even, right? And a lot of things right around our 2% target here. Groceries, very, very good. New vehicles, back to normal here. College tuition, hotel rooms, everything pretty much trending in the right direction. Back to normal. Still a few sticky elements on the top here. But all in all, guys, a very, very, very good report here, right? Because it just tells us that Jerome Powell may just have a little bit more wiggle room, guys. You guys know that this year has been marked by very strong GDP and very strong jobs. Now, in the last few jobs report, the jobs openings have been coming ever so slightly down. You had the non-farm payrolls here in October increased just by 150,000, indicating the labor market is showing signs that it's reacting to Fed efforts to correct a supply-demand imbalance that has been a contributing inflation factor here. So very, very good, guys. Also, wages are also also coming down on a relative year-to-year basis. Real average hourly earnings adjusted for inflation increased 0.2% on a monthly basis on October, but we're up just 0.8% from a year ago. So that's very, very good, guys. Wages are usually a very big contributor to inflation here. So everything is normalizing, right? The jobs market is becoming less and less hot, which means that Jerome Powell can take his foot off the gas because they need to maximize maximum employment here. So while rates are high, the number of job openings and people looking for work is potentially starting to get lower and lower and lower. That's good. The unemployment rate is going up, which means that that's factor number one, that Jerome Powell can contemplate potentially stopping, pausing rates, or bringing them down early next year to stimulate the job market a little bit more. And obviously, you guys know that the GDP has been very, very good. GDP surged in the third quarter, rising at 4.9% annualized, though most economists expect the growth rate to slow considerably here. So anything over 2%, guys, in GDP growth year over year is absolutely phenomenal here. And we've got very, very good GDP reports. So the economy is strong. The jobs market is tightening ever so slightly. Inflation is coming down. These are the elements of the soft landing that people have been talking about. So inflation is done. Let's get it out of our heads here. It's trending in the right directions and markets are absolutely loving it. That was one of the major reasons here for the massive rally here on the day here. So very, very good report. All in all, I'm very, very pleased. So looking at our index here, everything is massively green. That's pretty much it for the CPI report. Now, before we do get into our indexes here, I do want to cover two stocks here that we do cover on the channel here. So number one, in terms of earnings, will be Home Depot. What happened with their earnings, guys? Well, Home Depot, if you remember, I was always saying that this stock was a buy in my green buy zone here, 285 down to 260. It slightly grazed here in the end of October, and now we're off it with the earnings. So what happened here today? We popped 5%, was all the way up to 7% midday here, but they had a double beat, right? So they beat on EPS, beat on revenue, but the report was fairly mixed. A lot of this momentum to the upside, guys, I would contribute mostly to the very, very good CPI report, inflation report here today. You guys know that Home Depot is sensitive to interest rates in an indirect fashion, right? It's all in relation with home renovations, right? So since the interest rates have been high, people have been buying less homes and people have been buying less big ticket items at Home Depot. Let's say, for example, appliances and stuff like that. Big ticket items that require financing. Those have been down, and obviously people are spending less on home renovations when they can't afford it and when budgets are tight because interest rates are high. So that's why Home Depot, they did give a bit of soft guidance here. So it's a bit of a mixed report, guys. But Home Depot is set up beautifully. Their balance sheet is very, very good. Their growth prospects for the next 3 to 5 years are very, very good. It's just they're getting caught a little bit in the slowdown of the housing market here. So you'll see Home Depot shares rally on earnings beat, even as home improvement sales level off here. So that was the big kicker here. The home improvement retailer sales declined 3% from prior year period. You guys know that after the pandemic here, Home Depot had a tremendous rally as interest rates were cheap and everybody was renovating their homes and they had record sales, right? So comparing to the past 2 years of data is obviously going to be very difficult for this company, which is why they've been kind of stuck in this range pretty much since pretty much early 2022. As soon as rates started ticking up higher, they've been in a very big accumulation zone. Still a decent buy in my opinion down here. Price to earnings ratio is only about 18. They do pay a dividend and this company is extremely solid. You do see that the earnings are slightly coming down. That's absolutely normal, guys. As we've been saying, the home improvement sales have been slowing, but you guys can see that this company has no problem growing revenue year over year. They have absolutely ridiculous amounts of revenue, right? 158 billion last year, and even a bit more this year as well here. So very, very decent report by Home Depot here, but they've been saying that there is a slight slowing here, right? A customer who might have remodeled their entire home, maybe opting for a partial remodel now. Maybe they won't redo the entire kitchen. Maybe they'll just do the countertop and backsplash. And so it really just the downscaling of projects that we've seen. This is due to high interest rates here, right? So that is the unfortunate thing that has been plaguing Home Depot here, but it's fine, guys. In the grand scheme of things, this company is very well positioned. They're a very defensive stock. They usually perform well in all markets. And since there won't be a massive recession, in my opinion, they should do fairly well over the next couple of years, especially coming out of this big accumulation zone here, guys. Very decent opportunity to pick up some Home Depot for a legacy play for a long-term portfolio here. And as you can see, Home Depot has faced dual challenges over the past year, Elevated mortgage rates, like we've said, have squeezed potential home buyers, and high inflation makes big ticket items and major renovations a tougher sell here. So that's the item number one here, right? So customer transactions fell to about 400 million from 410 million in the year ago period. When shopping online and in person, customers' average ticket was $89.36, roughly the same as a year earlier. So now that prices have normalized, guys, Home Depot doesn't really benefit from any more pricing power, right? So prices have come up a lot, and now they're kind of plateauing, and then we will slowly increase prices with inflation, guys. This is what I want to tell you guys. So everybody that says, yeah, but Will, prices are still expensive. Well, of course they are, right? Because what happened in 2022 is prices came up like this with inflation. Now we're back to pretty much normal here. And then they're going to slowly start rising with the normal rate of inflation again. But you will never be able to really kill this increase in prices that we had due to that really high rally in inflation, right? It's just baked in. A lot of items will never come down to pre-pandemic levels, unfortunately. And that's exactly what we can see in Home Depot here as well. Decent report on the stocks at a fairly decent level as well. Now let's get into our second earnings report here, and it's going to be Canadian Solar, CSIQ, one of my favorite solar plays in the market. Why? Because they're so cheap. They have a market cap of 1.4 billion, guys, and they're sitting on roughly double that in cash and cash equivalents. Their financial position is extremely good, and their PE ratio is extremely low, 3.65. As you can see, they are a profitable company. They continuously grow revenues. However, it is a high interest rate sensitive environment here, and you guys know this year solar plays have just been absolutely destroyed because of the high rate environment, because demand is not there. All of the projects that people usually get when they put solar on their houses or commercial solar is usually financed, and with financing rates between 8 and 11%, it's very tough for people to justify the cost of installing solar. So what happened on CSIQ today? Well, the expected happened. Double miss here, crushed on earnings per share here, still positive though, miss by about 61%, guys. That's absolutely terrible. And a miss by about 11% here on revenue. So big decline in revenue as well. But they're bringing in on a quarterly basis, guys, they're bringing in pretty much their market cap in revenue on a quarterly basis. So price to sales of this company, guys, is under 0.2. That's absolutely ridiculous. The value is very cheap, but we obviously have to wait for the rest of solar to recover. So you can see what happened on earnings this morning when they came out with it. Stock plunge 18% here, guys, off of the earnings, but it was counterbalanced by a very good CPI read and the fact that interest rates now may be forecasted to have peaked and start coming down here as well. So that's why we sparked a rally in all of sector. They were not alone. You could see other stocks like Enphase. Enphase as well was up pretty much, 16% on the day. FSLR, another solar play, right? They were up 11% on the day, right? Solar Edge, let's take a look at Solar Edge. All of solar was up today. Why? Because of the fact that interest rates might be peaking here and coming down. Solar Edge up to 11% here. So that's why pretty much it was not due to anything in the report that made this stock come up. It's just the market and interest rates coming down that made this go up. The report was not all that bad, guys. The company is set up pretty good. Obviously, it's not going to be a great report because demand is lower, but through all the negativity, guys, there's very, very positive factors for this company, many of which I've outlined, how cheap it is, how solid their balance sheet is, right? So let's see here. Reported 5% year-on-year decline in third quarter fiscal revenue here to 1.85 billion, missing the estimate of 2.03. That's what we saw. The 22% sequential revenue decrease reflects lower project sales during the quarter and a decline in the average selling price of modules, partially offset by higher solar module shipment volumes. So they are shipping more, guys. It's just they have to reduce prices to entice people to buy their converters and their panels, right? That's exactly the same thing as Tesla's doing. When interest rates are high, they have to stimulate demand by lowering prices, right? So they did have fairly decent margins still, right? The module shipments reached 8.3 gigawatts, up 39% year over year. That's absolutely amazing, guys. Gross profit decreased by 15%. Sorry about that. So guys, resuming on CSIQ here, right? So total module shipments were up 39%. Very, very good. Gross margin decreased a little bit, 15% year over year to 308 million. Still good. They're still profitable here. Contracted, obviously. Operating income fell 6.4% to $83 million here. So net income is still largely profitable here. Very, very decent here. EPS was obviously down. They generated $494 million in operating cash flow for the first 9 months. Very good compared to $521 a year ago. So still maintaining very decent cash flow here. Look at this, guys. The company held almost $3 billion in cash and cash equivalents equivalents at the end of the quarter here. And you can see the market cap is only 1.4, so almost double the amount in cash than their company is actually worth on the open market here. So very, very decent, guys. Yes, the numbers did miss, and they also gave a bit lower guidance. That was to be largely expected here, guys. So as you can see, for Q4 2023, CSIQ expects a total revenue of 1.6 billion to 1.8 billion versus a consensus estimate of 2.65, so much lower than expected, and anticipates a gross margin of 14 to 16%. Very, very, very good still gross margins here, guys. They'll still be profitable here, and they still are shipping, guys. They still have a lot of contracts here in Europe and Asia as well. They have a few new factories coming online, mainly their new one in Thailand here. So very decent overall. We just had to wait for the entire sector to recover, guys. This is nothing bad with CSIQ itself as a whole, guys. CSIQ actually has one of the best balance sheets in terms of their valuation in the entire solar industry here. So very, very decent, very, very decent stock at these current price levels. Obviously, we just need to wait for the entire solar market to recover, and that's going to be a byproduct of consistently dropping interest rates here to stimulate demand. So that's pretty much it for our earnings here, guys, today. Now we're going to get right into our major indexes. So SPY here, you guys can see very beautiful day on SPY, crushing our downtrending trend line here. And as you can see as a whole, guys, look at this heat map today. Broad market rallies pretty much across the board. Only a few names in healthcare and one in oil here, not pulling ahead here, but all in all, guys, very, very good day. Healthcare once again trailing behind. Healthcare has been our laggard now for a couple of months, and that continues. Financials with a very good day, obviously, because of the drop in the 10-year yield and 20-year yield that we saw today. And on the one-day relative performance here, guys, you can see double-digit not double-digit, but over 2% performance here by a lot of our major indexes. And on the one-week relative, guys, you can see these percentages, right? 4% by technology, 4% by real estate. Absolutely amazing. Even financials up by only almost 3% here. Healthcare still trailing a bit behind, guys. And now on the 1-month relative, you can see that a lot of good things are in motion, guys. Tech obviously coming out ahead here. Financials very, very good at almost 3% on the 1-month relative here. Only healthcare and energy trailing behind. Healthcare is the missing factor, guys, to really start bringing SPY to new levels. And if we do get a pullback in QQQ and XLF, I would like to see XLV start doing some of the heavy lifting here. So as a whole, guys, daily uptrend is well in motion for the bulls here. Bulls in absolute full control on the daily, even on the weekly, guys. Beautiful engulfing move. What we were saying yesterday is even if we do pull back eventually, there's so much space to set a lower high, guys, and rise and set a new weekly uptrend. So the bulls are in full control here, guys. Full control of the monthly at this point, right? Full control now at this point of the weekly as well. Going to be very tough for bears to just V-shape this to the downside. I don't think that's going to happen. So bulls are set up nicely. And even on the daily, set up beautifully at this point. Any pullback. And the only thing that worries me, guys, is there's a little bit of a gap here. So there could be a little bit of a gap fill, but even that, so much space, anything above 434 is just going to be looking for a daily lower high for further continuation at this point. Beautiful day of performance by SPY, crushing the bears, crushing this downtrending channel line as well, encountering a bit of resistance up here, but still very, very, very good, guys. We're really coming back up here to our previous 52-week highs ever so slightly here. So very, very good performance by SPY. Now let's move on to QQQ. QQQ also very good performance here on the day, guys. Obviously, technology had a beautiful day, 2.15%. And QQQ, same thing. The bulls are in absolute full control, blasting through this resistance area now at this point. Anything above 370 is just going to be looking for a daily lower high. Any pullback is for the bulls to be buying the dip. And now they can use this entire area, guys, as support, as support here. So really look to this area as support. If we do pull back, 378, 377, and then for a potential other leg up, third leg up for the bulls at this point. On the weekly is full bull control at this point. You can see weekly downtrend here by the bears, absolutely engulfed and crushed by the bulls at this point. So bulls in full control of this weekly time frame as well here. Any pullback on the weekly, once this daily chart tops up here and we start setting a daily downtrend potentially, well, that's just going to be a weekly pullback here for a just weekly higher low for further move to the upside here. So very, very healthy, guys. It's tough for me to buy up here, obviously. Want to be buying on a dip. I will be looking, guys, if you want to know, I will be looking for weekly consolidation whenever that happens, because eventually it will need to happen here. And I'll be looking at individual companies, but the index, bit tough for me to buy up here. XLF financials, finally setting the daily uptrend here, right? So now finally a break above our resistance level. We were talking about this all week, guys. $34 was going to be the level to watch here, and now we have smashed it to the upside. So any pullback at this point, just going to be for a daily higher low. Anything above 33.50 is just going to be for that daily higher low for trend continuation here by the bulls. So bulls in full control of the daily time frame now. Bulls also looking like they want to capture the weekly as well here. So weekly engulfing move. Any pullback on the weekly is going to be for a weekly higher low for weekly uptrend change. So now that the bulls have changed into daily uptrends across everything, now we will look to the weeklies, and the weeklies is the missing link, right? So we've been in weekly downtrends on all of these indexes and daily downtrends. The monthlies were always good, but we were missing weekly and daily. So now we have the dailies, and now we will be looking, once the daily moves top up, to set the weekly uptrends. And once the weekly uptrends are in motion, guys, it is pretty much off to the races. We will be looking to target our 37 area. But for now, bulls doing a great job of pushing through here, obviously running into a bit of resistance here around the 35 area as predicted here, but very, very healthy. Now, XLV Healthcare still lagging behind, however, guys, right? So healthcare, not with the best day, but still green here today. They pushed up a bit on the morning, but gave it all back. We're still looking for that daily trend change. Need to see a break above 129. So this is our laggard sector. It is lagging behind the rest. You can see that in the size of the move, but looking fairly decent, guys. We do have a bit of weekly consolidation. So bulls looking to do two things at this point, okay? We're looking to change the trend to the upside. That would be a break of 129. 129 is a key level. I'll leave that line on the chart. You will see on the weekly as well, same level. Looking to change the weekly into an uptrend here. So we will see if the bulls can do it. But with the rest of the market continuously doing well, I do think that the bulls are in capacity to make that daily and weekly trend change happen. It's just a question of time here, guys. You guys know healthcare has been consolidating in a range for the past 2 years. So it's just a question of accumulation here. And once healthcare starts running, guys, watch out. I do think that this thing will rally pretty hard, especially after having all this accumulation and coiling up in the past 2 years here. So good performance by the bulls, but still missing that crucial step of setting the daily uptrend here. Obviously, we don't want to lose the lows of 124.60 here. So if we do come back a little bit here, I'd like to see some sideways consolidation before eventually breaking that 129, but very, very healthy XLV. Now, IWM Russell, what a phenomenal day by the Russell here, guys. Up almost 5.5%. 5.5%, sorry. You would have to go back to pretty much February of 2022 to see a top to bottom move of 5.2%. So where is it? There's one day in here from the lows here, right? Back here in February. And this is how long it's been, guys. This candle right here, right? Bottom to top was pretty much 5.2%. This day, even better here. So very, very good performance by the Russell. And the Russell did a key thing today that we've been looking. The same thing that XLV needed to do. Well, the Russell just did it. They finally set the daily uptrend, guys. First daily uptrend on the Russell since the month of July. So very, very healthy movement by the bulls here, right? Smashing through our resistance here, 175.48 in one clean shot. Now finally back above our moving averages. You can see the 12 wants to cross above the 26, and that means that your new bull market in the IWM is pretty much started at this point. We will have a very, very good weekly push up here, right? And any pullback on the weekly is going to be as well for a weekly higher low most likely, and start changing the weekly uptrend. Have not had a weekly uptrend in the Russell since June and July as well. So very healthy move by the Russell here. If I do say so myself, we will be targeting areas of resistance next all around the 182 range, so just keep an eye on that. This was the buy area, guys, so I hope everybody was able to make some plays here in growth stocks or IWM as a whole. I got a little bit too greedy, didn't actually generate any premium down here. So I will be looking now that the bulls have recaptured here. If we do get any pullbacks, guys, I will be playing the Russell. Why? Because I am looking for the potential weekly trend change as well here. I do believe in this index here over the next 12 to 24 months. And here is still a very good buying opportunity, even in the 170 zone here. Now that we're confident here with the CPI report and everything behind us, now we have more confidence here to take these trades. So nice little inverse head and shoulders happening here. Very, very good move by the bulls, creating a ton of space. Any pullback at this point is going to be for a higher low above 167 for continuation of the daily uptrend here. Beautiful move. And now Dow Jones here. Dow Jones as well. Dow Jones daily uptrend is continuing here on the Dow Jones, smashing through our area of resistance, this green box right here. Now encountering the next area of resistance, which we always said was 35,000, right around that range. So very normal, but bulls looking extremely healthy here. Any pullback, guys, is going to be for a higher low above 33,900 to set the daily uptrend continuation here. Very healthy move by the bulls on the daily and on the weekly as well. You can see this is a beautiful weekly engulfing move. So 3 legs down by the bears and now engulfed here, almost engulfing 2 legs in 3 weeks here by the bulls. So very, very healthy. As soon as this daily move tops out and we potentially hit daily consolidation, that will also be your weekly consolidation. Just looking for a weekly higher low for the weekly trend change, guys. No weekly uptrend on the Dow Jones since May and June into July pretty much. So going to be looking forward to that when it happens. And when that happens, guys, I'm pretty sure that we are going to start heading towards our all-time highs of around 37,000 here. The Dow Jones is very, very well positioned here for a breakout to the all-time highs. So I would be watching for a lot of value names, and a lot of value names are still somewhat cheap here, guys. So keep a very close eye on Dow Jones names as a whole. Now let's move into our major tech names, guys. So major tech, starting off with Apple here. Apple with a beautiful day, almost up 1.5% as well. And you can see this move on Apple just continues to go up, guys. From the lows, this is pretty much like 13% rally in one clean shot on Apple. So very good, even though we are slightly extended here on the 4 hours. Our daily time frame is not yet overbought here, so Apple does still have a little bit of room to move. We will be targeting the 190 resistance area as a likely area where the bulls might encounter some resistance here. But all in all, as soon as Apple does choose to pull back, just looking for the daily higher low here for the daily trend continuation to the upside here. Apple bulls is doing an amazing job. I'll reiterate, the weekly is looking very, very, very healthy on Apple at this point as well. So you can see that right here. Bulls with an engulfing move, 3 legs down by the bears, engulfing once again. So once this daily move tops up and we potentially get a slight little daily downtrend here, if that happens, we'll just be looking for weekly higher lows here and to set the weekly uptrend. Obviously, we have not had a weekly uptrend this entire time in the last 3 months pretty much. So that weekly uptrend shift will be huge because it's the only time frame that bulls don't control. Bulls control the monthly. They don't control the weekly just yet. Just need to see that extra little step, but pretty much already almost in control and now in full control of the daily as well. So great job by Apple. Any single pullback, if we can get a little pullback here into the lower 180s, perhaps potentially for some gap fills on the indexes, maybe I will be looking to write some puts here in the lower 180 area. I want to start to play Apple more and more on a regular basis here, as I do believe that they will continue to outperform AMD also with a very beautiful day, guys, up 2.65%, but you can see they were even higher than that, guys. Like AMD was up when I first saw it pretty much early in the morning here. It was up almost 4.5%, right? So still maintaining some decent gains here, but AMD kind of running into the area of resistance here. 120 was the area to watch, and they are running into that area right now. The daily is not overbought yet, but you can see on the shorter term timeframes here, it's been slightly overbought here pretty much all of the month of November at this point here. But bulls very, very healthy. Look at this 12 EMA on the 4 hour just being maintained and maintained. So very good work by the bulls here. As soon as we top out, this chart looks like Apple. We are just going to be looking for the daily higher low here, target anywhere in between the 114 down to 112 area for that pullback for the daily higher low and future rise as well. When that happens, guys, on the weekly, we are just going to be looking for a weekly higher low as well. Weekly bulls in full control of this new weekly uptrend, have not had a weekly uptrend on AMD since May into June, right? So it's been a very long time on AMD. You guys know we've been talking about this 5-month consolidation. So the bulls are in full control of every single time frame at this point. We'll just be looking for a slight pullback. And this slight pullback, don't quote me on it, but it may be the last buying opportunity for AMD in the lower 100s, guys, before we start marching higher and higher, back up to 130, potentially back up to 140. AMD positioned very well for the next 12 to 24 months on a financial and guidance standpoint here. Now moving on to Amazon. Amazon, another beautiful day, 2.25% up here. So Amazon daily uptrend is confirmed at this point by the bulls, right? So a little bit of sideways consolidation before they popped higher here. And Amazon now setting a new 52-week high on the day here today, 145.80, right? They got all the way up to 147.35. That was a very, very phenomenal day by Amazon, if I do say so myself. So any pullback, as soon as this second leg completes, any pullback is just going to be for a higher low for future move to the upside. I will be targeting pretty much 143, 142 as your likely area that you could pull back into in terms of support. We are not yet overbought on the daily, I'll remind you, and even on the 4 hour here. Yes, we've been overbought for a while. This kind of looks like AMD and Apple. Bulls just using this 12 EMA to just grind higher, guys. No red flags for Amazon. Beautiful company, if I do say so myself. And as soon as this daily move, potentially, let's say the daily move potentially tops out into daily consolidation eventually, well, we're just going to be looking for the weekly higher low as well. Now, weekly, engulfing move. So the weekly uptrend, guys, is pretty much all in the bag for the bulls at this point. Any consolidation will just be for a weekly higher low and for a weekly move to the upside. Amazon still representing some decent risk to reward, guys. Amazon still off the all-time highs, more than some of the rest of tech, guys. Still off the all-time highs by about 22%. Very, very good performance by Amazon here. It's just been on a heck of a tear. Now let's move down to Google. So Google here, Google all the way up to 135.43 here. So very good performance by Google, if I do say so myself. I sold my shares a little bit early. I was expecting a pullback early last week. Never got it, just continued rising here. Very good performance by Google, almost entirely filling this negative earnings gap now. Back up to 137.18, but we gave back the gains intraday, but still protecting a little bit of them, guys. So daily uptrend at this point by Google is inevitable, right? So any single pullback here is going to be for a daily higher low above 130.85. If for every which reason we start pulling back a bit more, we'll just zoom out to the weekly, guys. The weekly also needs to set the weekly higher low unless they want to V-shape this right away. They could either V-shape this or they could do it in 2 steps, which would not be a bad thing either. Google looking to regain the weekly uptrend here. The monthly looks absolutely gorgeous on Google. It's just the weekly that is a bit ugly here. Need the bulls to regain this weekly uptrend here. On the daily, they've now put in so much space before the lows here, guys, almost up 80%. So now going to be very impossible for the bears to really just recapture this to the downside here. I do expect the bulls to protect this and continue a daily uptrend into previous 52-week highs on Google. No red flags whatsoever. Very, very nice performance. Now let's move down to Meta. Meta, guys, another new 52-week high today. Beautiful performance by Meta here. Meta is now quickly returning, guys, into the all-time high zone. I'll remind you guys, after here, there's only 2 more levels, 350 and 380, and you're just like that. In pretty much a year, you are back on Meta to all-time highs after the stock got crushed pretty much all the way down, 77% on Meta. They've now rallied all the way from $88 back up to $336 in a year. Absolute phenomenal rise, guys. Absolutely ridiculous rise, if I do say so myself. Rivaled only pretty much by NVIDIA. So very, very good performance by Meta on the year. Nothing to say whatsoever. This company is extremely, extremely solid now that they've got their cost management under control here, and that they're spending less on the metaverse and they're expanding their ad revenue segments. So any pullback on Meta here is just going to be looking for the daily higher low. If we do pull back, guys, target your previous resistance line, right? 325-ish, let's call it. That's going to be the area that most likely Meta bulls are going to pull back into before potentially setting another leg higher here. No red flags for Meta whatsoever. And if we continue moving to the north, well, 350 is going to be your area of future resistance here. No red flags whatsoever. And on the weekly, the bulls now fully engulfing this move beautifully here, right? So weekly uptrend at this point is regained by the bulls here, right? Except for this little tiny earnings dip. We'll call that an anomaly at this point. Weekly uptrend is more than set by the bulls here. So all time frames in control by Meta here. Meta now in a new monthly uptrend at this point, right? Monthly pullback. And now monthly uptrend here. Very, very beautiful move. Weekly uptrend as well. Daily uptrend by the bulls is pretty much all but confirmed at this point, right? So absolutely no red flags on Meta whatsoever. It's just I can't buy it up here. Valuation is a bit rich for me at these levels here, guys, but no reasons to sell in my opinion here. Very, very beautiful move. Now, Microsoft, same thing. Microsoft again, guys, all-time highs again, right? So Microsoft, no sign of slowing down yet, although they are slightly overbought on the daily here. No big consolidation days for Microsoft yet. Still overbought on the 4-hour time frame here, so a little bit tough for me to be buying up here. Would be waiting for a little bit of a pullback. If we do get a pullback, guys, probably target your previous all-time highs. 360 down to around the 355 area is going to be a likely area for me for any pullback here, right around the 12 EMA as well. Daily uptrend is controlled by the bulls. Any pullback is just going to be for a daily higher low above 326 for the daily trend continuation to the upside. No red flags. Obviously, Microsoft bulls control the weekly time frame as well. Very, very beautiful price action here by the bulls to reverse this weekly downtrend here into a new weekly uptrend here. Very, very beautiful price action. Any pullback on the weekly is just going to be for a weekly higher low for future price expansion. Microsoft, one of the best companies in the world, and they continue to prove why here. On the monthly, they control everything as well. So bulls in absolute full control of Microsoft, just waiting for a healthy pullback at this point. Now, NVIDIA also almost at all-time highs, guys. Look at this rally, right? Off of the lows, NVIDIA here in the past 2 weeks, right? They've rallied almost, 27%. That's a phenomenal gain, really running into potential disaster to back to complete euphoria back to all-time highs, guys, in the past 2 weeks of trading. That was absolutely a beautiful move by NVIDIA, if I do say so myself. So any pullback at this point will just be for a daily higher low for the daily trend change. Bulls have still not changed the daily trend. This is one move. Need to eventually change the daily here. So will we get some pullback into earnings, set the daily higher low, and then smash to the upside? That's a very likely scenario, guys. It could play out that way, right? But one thing is for sure is we've now created a ton of space between the 404 level, which is the area to watch, right? So now the bulls back in control pretty much of the daily here, unless something goes completely wrong. And then obviously we do have control of the weekly again. Any pullback on the weekly will just be for a weekly higher low for a weekly trend continuation of the upside by NVIDIA. And also on the monthly, guys, NVIDIA, if we start smashing the all-time highs, guys, that's the monthly trend just resuming for NVIDIA as well. This company has absolutely phenomenal growth prospects over the next 5 years. So would not surprise me here, guys, if they do keep rising even after this earnings report right here, right? So expect future gains by NVIDIA. No reason for them to slow down yet. The demand that they're going to create with their new revenue streams over the next 2 to 5 years is going to be absolutely substantial. So if you think this company is overpriced, rethink price to earnings growth. That's far more important, guys. Their PE ratio may stand at 117 right now for the trailing PE, but on a forward basis for the next 12 months is only about 27, 28. So it's actually not that bad. Actually, at this price, it may be closer to 30, but down here, it was pretty much 27, 28. So not that bad at all, guys, right? So very good performance by NVIDIA. We will see what happens on earnings a week from today. And now lastly, Tesla, Palantir, and PayPal. So now Tesla setting the daily uptrend. Finally, that's exactly what we wanted to see by the bulls. And now we're coming into our potential area of resistance, right? So I was saying 235 to 240. This whole area right here is going to be potential resistance for the bulls here. So daily uptrend is now set. Any pullback off of that resistance is going to be looking for a higher low, anything above 206. Higher low for further daily uptrend continuation here. If they do pull back, expect to pull back maybe in the 225 area. Moving averages down here. Previous resistance will now be support as well, right? And it is a nice little area for a pullback here. So just going to be looking when this move does top out for a daily higher low, daily trend change attempt here. And on the weekly, guys, weekly is looking fairly good as well, right? Weekly downtrend was had by the bulls after by the bears after earnings. Now we get to see how high can the bulls push in the opposite direction, right? So look at this push at this point, guys. Now the weekly is almost up to our golden level of 62%. If the bulls are able to capture 62% of the down move, they can set up for the potential weekly trend change here into the end of the year and into early next year, which would be very bullish. We are still looking for our monthly higher lows on Tesla. And if the month of November closes like this, very possible that we got it in October here. So looking for that monthly higher low for monthly trend continuation here. It is a monthly uptrend. So the bulls control the monthly. They don't control the weekly yet, but now they control the daily as well. So a lot of these things, the only thing missing is the weekly here, but no red flags whatsoever, guys. Most of these companies are very, very well positioned. We'll just be monitoring Tesla here for the continuation of the daily uptrend here. Need to see them get as close as possible to 256 off of this weekly move to set up for a beautiful weekly trend change. No red flags on Tesla. Tesla making back a lot of lost ground. Now, Palantir, still a good buy area in my opinion as well, guys. Now Palantir and PayPal. So Palantir pushing again, guys, almost cracking to 20.20, which is our previous 52-week highs. If they do that, they set the new 52-week highs. But not only that, they set the monthly uptrend. This could be a monthly uptrend by Palantir, the first in its stock's history. I do believe they are going to get S&P inclusion, guys, once they post one more quarter of profitable growth. That would be it for them, guys. So watch out for that headline, S&P inclusion. Weekly, full control by the bulls. Palantir with some amazing pricing power as well, growing their client book and generating more revenue from each client. So all metrics going absolutely amazing by Palantir. You can see that down here. EPS continues to rise and revenue continues to rise, and they are really getting into profitability here. You can now see it actually four quarters already of profitable growth. So eligible for S&P inclusion. My mistake. I thought they needed one more, but now we are fully good. So very, very good net income here. The bulls in full control here on the daily. So any pullback, guys, is going to be for a daily higher low. Anything above 18 is going to be for that daily higher low for future continuation here. On the weekly, obviously weekly uptrend here, and weekly and the monthly here, looking for the monthly uptrend here, guys. Monthly uptrend, watch out. We're coming right back in to this $25 range. So very beautiful price action buy Palantir. Very, very good growth company here for the next 5 years. Even at these prices, in terms of a trade, may not be the best trade as much as it was from, let's say, 14 or even down all the way here. But for the next 5 years, this company should be outperforming the rest of the market because they are a very high growth company. And now lastly, PayPal. PayPal finally setting the daily uptrend. Not able to close up there, but they did crack it, guys. They cracked our previous high here of pretty much 56.72. You can see that right here. High on the day was 57.19. So new daily uptrend is set by PayPal, closing nicely above our moving averages. Now I need to see some follow through. Get me back up into the $58, $59, $60 range. Give me a bit more space on this daily uptrend, and then we can talk, right? So we were looking for a bit more price expansion, then a little pullback. Let's probably sit back on this $57 range here, and then start rising, really consolidate that daily uptrend nicely here. And then we will be looking for a potential reversal here on the weekly uptrend as well here. So need to get us as close on this weekly push, need to get as close as possible to $62, $63, and then they can really get something like this going, similar to what they did back here pretty much in May and June. So very, very good performance here by PayPal on the day. Very, very pleased because of interest rates coming down, or the potential of interest rates coming down sooner than expected. Obviously, your payment processors and financials are going to have a very good time with that because they're forecasting that payment volumes may just resume to be higher. So now PayPal, very, very nice daily uptrend started. Need to see a bit more by the bulls at this point, guys, but very, very good. Just would not like to see them come back and lose these lows of 53, guys, because that would just be further daily consolidation. They have some good momentum going. Now let's keep it up. So that's pretty much everything I had for today's video, guys. I hope you guys had a beautiful day. We continue to push higher on these markets here. Just watch out for the little potential gap fill. Eventually may not have to happen tomorrow and right away, but eventually if we do start pushing a bit higher, we could get a little bit of a daily downtrend here into the gap fill here, and that would just be healthy weekly consolidation for a potential weekly uptrend shift. So very healthy on the markets overall, guys. So as usual, if you like the video, consider liking the video. It helps me out for the algorithm and everything like that. If you are new here, consider subscribing to the channel, guys. 460 subscribers pretty much. I can't thank you enough. I really appreciate it. And lastly, if you have any comments, guys, macro options, stocks, you know it, leave them down below in the comments and I would love to answer you, get back to you in 24 hours or less. So take care, guys. I'll see you tomorrow after the close. Peace.